Yo, what's up guys? Welcome to another video. Today I'm gonna show you how actually Sarwa is making money for you and the stocks and the ETFs they are using to grow your portfolio. So stay tuned, and if this is the first time you are watching this video, please make sure to hit the subscribe button. This is gonna support my channel and it's gonna make me inspired and motivated to make more videos like this in order to help you achieve the optimal goal, which is being financially free and making more money online. So let's just go ahead. I'm gonna show you guys. This is my account here in Sarwa. So before even start explaining the video is, if you are really interested in Sarwa and you want to register, don't forget to use my link to register, because this is gonna make you get $50 on the beginning just by funding your account and using my link. If you just go ahead and use Sarwa without even registering with this link, you're not gonna get anything. You'll start from zero. Of course, I'm gonna get also a $50 as a reward from Sarwa, but still, this is a very helpful for you to start because your account is still in the first stages. So the more money you're gonna get is better. Put the link in the description below. So if you are interested, just use it from the description and go ahead and register. If you actually go back to my channel, and I'm gonna provide a link also in the description. If you don't know what is Sarwa and what's how they make money for you, this video is gonna be very helpful for you. So make sure to watch it. And so at that time, my portfolio was around 6,400 something. But these days, actually, the stock market is really suffering and it's going down. And if you go just to the charts, and you can see all red here. So I have all the stocks actually here. You can see VTI on everything that Sarwa is using, Apple, Neo. It doesn't matter. Even cryptocurrencies is like really going down these days. So these are very bad days actually for all the traders. But anyway, I'm just gonna break down the things that Sarwa is using to make for you money. So this is your portfolio positions. So they are actually using around four stocks markets. So we got the VTI, we got this IFA and IMG and VNQ, and then they have two bonds. We have this US and the global. So we're gonna go quickly and break down each one of them. So we're gonna start with the VTI. So I already made a video about VTI, so it's gonna explain for you more and more, but I'm gonna go briefly here. So VTI is actually a ETF made by a company called Vanguard, and this is actually it's about the stocks in US. The price of one share of this ETF is actually 210 as of now, and you can see this is the progress of the stocks. This is the performance of this ETF. So you got in 1 year you have plus 43% return from your investments. So if you can see here, last year it was around 149 and currently it's 210. So that's a good thing. So what is actually the VTI? You can just see here, Vanguard Index Funds. It's an exchange traded fund that launched and managed by the Vanguard Group, as we discussed before. The fund invests in public equity markets of the United States. So just to conclude all of this stuff, it was actually started operating in 1992, and what it actually trades in the 500 largest companies in the US, plus the mid and small and micro cap stocks as well. So it's a lot of companies in the US is consisting this ETF. So the details about this fund is US equity is the fund type, the issuer is Vanguard, we said before. Inception was 2001. Expense ratio, this is how much you pay to hold these shares. It's 0.03, which is around like $2 uh, of $1,000 share. So This is the holding breakdown of the VTI. So most of it is about technology, the finance, and all of this good stuff. And the top holdings is, you can see, is Apple, Microsoft, Amazon. So you're literally, this is where your money goes actually. So even though you don't know about this stuff, but this VTI is putting a percentage of your money on each of these big companies. And this VTI is also paying you something called dividends. Dividends, it's a amount of money, or like you can say, it's a piece of the profit of these companies. They give it to all their shareholders, and this is can be annually. It can be like after 3 months or after 4 months. After each 4 months, they will give you an amount of dividends. So you can see here the annual payout is $2.83 per year for every share you have. So this is the VTI. We can go now and check the second one, which is the VNQ. You can see here in Sarwa, the VNQ is here as well. It's the real estate ETF. So you can see as well, in 1 year, this is how much money gained. So 33%. This one is definitely, just by name, you can see it's about the real estate. So it invests in public equity markets of the United States, invests in stocks and companies operating across mortgage, real estate, investment trusts, financial, diversified financial real estate. So it's all about real estate in the US, which was incepted in 2004, and this is the expense ratio is 0.12. So this is actually a bit expensive than the VTI, which means around $12 you're gonna pay in order to have around $1,000 worth of shares. You can see the returns here. This is the price in 1 year. This is in 3 years. In 3 years, it was not a good return rate. In 5 years, you can see it's even worse, and in 10 years, it's in almost 58%, which is not like a higher return, but it is okay. And you can see it's compared to the S&P 500 and all this good stuff. The holdings is just basically real estate. It's 99%. The top holdings, you can see, this is the top holding companies, and it's most of them, if I cannot say all of them, they are just about real estate. Dividends, yes, they are having $3.2 a year, as you can see here, and you can see the payout dates here, the last one, and it is quarterly as well. So this is all about the VNQ, which is about real estate. Next one is gonna be iShares ETF. So in 1 year, you can see they are gaining us 40%, which is okay as well. And the current price is $74 as of now. You can check here. This is the profile. iShares is actually another company, same like Vanguard. This is a different company. This is an exchange traded fund launched by BlackRock. This is one of the best companies in investing in the world. And the fund is managed by a BlackRock fund advisor. It invests in public equity markets, globally, in the US and Canada region. The fund invests in stocks of companies operating across diversified sectors. It invests in growth and value stocks of companies across diversified market capitalization. So as we can see here, the expense ratio is lower a little bit. So it's going to be $7 for each $1,000 spent on this ETF. And the holding breakdown is about industrials. This is the top, plus financials and all of this good stuff. Top holdings, you can see this is the top holding companies. You can see like Nestle or Toyota Motors and all of these big companies, but you can see here it's only like small percentages. Dividends, yeah, they have a small amount of dividends. It's semi-annual, which means like they pay you twice a year, which is not bad as well. This is iShares, and the next one is the emerging markets ETF. This one is now trading at $64, and in 1 year it's also around 45%, which is okay. It's not bad. This one is about emerging markets. It is a global emerging. It's about the global emerging markets. It invests in stocks of companies operating across diversified sectors. and it invests in growth and value stocks of companies across diversified market capitalization. All right, so the details as we see as well, 0.11% is the expense ratio. It's going to be around $11 for each $1,000 spent on this ETF, which is a bit higher number. And you can see this is how much money gained in the 3 years or 5 years. The holding breakdown, technology is the first sector, which is around 21%. And you can see financials, communication, energy, a little bit of real estate. So not bad. It's a bit diversified, but most of it is in technology and financials. Top holdings is, you can see these, all of these good companies. It's not in the US, so this is in the world. The top companies in the world. You have Taiwan semiconductor manufacturing. We have Alibaba Group, Samsung, and China Construction Bangkok, and a lot of good and big companies. Dividends, yes, it's a small percentage as well, and it is semi-annual, as we said, twice a year. This is the ETFs, and now we're gonna switch to the bonds. So we have actually two bond ETF that is used by Sarwa. We have the Vanguard Total Bond Market ETF, which is the one in the US. So you can see in 1 year, it's actually not doing a great job. In 5 years, it's +2. 10 years, it's only +4. This is actually normal for bond ETF because they are really very slow in the movement. So they're not gonna make you a lot of money or something, but it's a good way to keep some of your money in bonds. You can learn more about bonds, as we said here. The expense ratio is very cheap, is 0.04, and this is the return, which is very few. Dividends, yes, they pay you a monthly dividend. Actually, this is every month, and payouts, it's not gonna be a lot, so $1.97 a year, and they will give you this amount it will be divided on a monthly basis. Top holdings, this is the top holdings of this ETF, and the next one and the last one is the total international bond ETF. This is international one. The previous one was about the US. This is an international one, and also this one is not doing very well. So basically, just by the name, you can understand that it's about international companies as well. It has a 0.08, which is a bit expensive compared to the previous one. And this is the returns, which are about 4% in 3 years, 4% in 5 years as well. This is the breakdown of their holdings. Most of it, it's government and corporates and all this good stuff. Top holdings you can have here, these European companies, and they also give you a small amount of dividends monthly as well. So that's pretty much it, guys. This is all this stuff. They are using it in Sarwa in order to make your money, and based on the growth level that you are gonna choose and the risk that you will have in your profile, you can say these percentages, they're gonna differ in your portfolio. So for me, since I have a high risk portfolio, I have 40% allocation of my portfolio is in the US stocks, 35% is in the developed market stocks, 11% in the emerging markets, 4%, and it goes on. And as you can see, the bonds, they only put few percent, because since I have a risky portfolio, then they must put more money in the stock markets and not on bonds. And of course, they're going to keep a little bit of cash, so they can deduct their fees as well, so they will not have to sell your stocks to do that. So that's pretty much it, guys. Thank you very much for watching. And since this is like about stocks and everything, they just keep updating it every day, so this amount is actually considered about yesterday. So they just updated this one yesterday, so tomorrow they will update it. So I'm expecting it will be lower, the amount, because as you see, guys, the the stock market is all red today, so everything is down 1%, 3%, and all this crashing in a moment. So I'm not expecting I will get some money. So that's pretty much it, guys. Don't forget to get your free $50 if you register by my referral link. I will put that in the description box. If you use that link, you will get $50 as a bonus, and of course I'm gonna get also the same amount. This is gonna be good for you because you are the beginner in this platform. And if you just go ahead in the website and you didn't use my link, you will not get anything. So you'll not get any $50 or anything. So don't miss this chance and get your free $50. And that's pretty much it, guys. Thank you very much for watching. If you have any questions about Sarwa, you can either watch my previous video that I'm gonna put also the link in the description to help you understand more, or you can just write me in the comment section below and I would be glad to help you out with all your questions. Thank you all very much, and have a nice day.